The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here at TFNN. Don't forget you can listen to us anywhere on your mobile phone at tfnn.mobi and watch us live on Tiger TV at tfnn.com. And markets are moving today, having an interesting morning. I got a good little amount of volatility right here, and so we'll be going into a few of those things. Also, covering the news that's up and coming for the upcoming week. All right, so first things first, let's figure out where the markets are at, and then we'll take it from there and knock it out one piece at a time. Okay, well, looking right now we'll check out the indices. We'll look at the commodities, the forex pairs, like I do each and every day, and just like I said, step by step, walk through each one of them. And pulled up my charts right here, maybe a minute before they render over to y'all, but we'll get them up there here in a couple minutes. But right now, just to get you caught up on where the markets are at, we got the S&P is currently up 4 points, just sort of oscillating right there. We got the Russell's currently up 3.8, and let's see, we got the Nasdaq really heading south, currently down 23 points on the day. So down 23 points on the day right now. So Nasdaq really getting hit the hardest. Dow having the most strength, up 70 points. Had a big move up earlier today, and it's been the only thing holding everything up. Nasdaq's trying to pull it down, and the Dow's trying to pull it up, and the S&P and the Russell are just stuck right in between the two. All right, so also looking on over at copper. We got copper right now. It is up about 0.8% there. We got gold up $5, not a big move. We have silver down 0.5%. And looking on over at natural gas, it is currently down, about 1% on the day. We have oil is currently up $1 on the day, up over 1%, so a nice big move there in oil. It decided to finally start moving and shaking there. We have corn is up just a couple ticks, so barely even moving, but soybeans getting slammed down $1.64. So a nice big move in soybeans. And don't forget, you can trade all the products I'm going over today right now on Nadex. Looking at the euro dollar. We got euro dollar is currently up 23 pips. We got Aussie dollar up 55. We got the pound dollar is currently down 11 pips on the day. And dollar franc is currently down 16, with dollar CAD down 39 pips right now. Looking out over at US yen, it's only down 5 pips. Aussie yen is up 43. Euro yen is up 3 pips. Pound yen is down 30 pips. So a lot of mix right there in the yen pairs. And euro pound up just a mere 14 pips. Usually not a big mover either way. Euro pound sort of just a small, sort of a choppy, but not a big moving market, because the euro and the pound are so correlated. There's just not a lot of movement on the euro pound itself. Let's see here. So, like I said, that gets us caught up there. Try to see what else we got that we can do. But like I said, we do want to hop in and we want to look at the news that's coming up. And let me get that open for you, and we'll start walking on through it. But right here, and like I said, the screen share is taking a minute, but we'll get it fixed and up and running for you. We had the core CPI, we had the core retail sales that opened on up, and that was here on the dollar CAD this morning. A little bit bigger move than average, so usually don't have the kind of movement that we had today on the dollar CAD, but nevertheless, still a nice moving day, and I said quite a bit there that you could have hopped in on and really taken advantage of, but it would have been a little bit difficult. That iron condor is going to be a little bit tough in order to be able to pull that off. So let's see, we got dollar CAD, and there we go. Okay, looks like it might actually start sharing over here pretty soon. I'm just trying to get my screen share set up and running. But all right, there we go. Now it's live. Okay, give me 1 second, and you'll see. I want to get that going for you. I don't know what's going on here the last couple of days with that, but I'm going to get it resolved after today's show. And let's see. We push a couple quick buttons, and you'll be ready to see the screens. Okay, so we got dollar CAD right here. I'm going to zoom in on this, and I'm going to back on down here to the 5 minutes, and then we'll look at the movements. Like I said, right there, you can see where that news happened. Definitely this morning, 7:30 Central, 8:30 Eastern time. And the core CPI came in at 0.7 on an expectation of 0.5, so quite a bit better. Core retail sales came in at 1.0 on expectation of 0.9, but they did revise the number down. But the big thing is that CPI number actually came in higher. If you want to, what is CPI? CPI is basically the change in, the average, goods and services purchased by consumers. And it doesn't include certain, really volatile items. But it's just a good measurement on the healthy economy. Are things picking up? Are they costing more? And in this case, the answer is yes. And you'd have been able to see that. And like I said, when that happened, it was instant. So the market ran really, really fast. We went from 1.23 down to 1.174. That's about a 50 pip move. Okay, so big move on that. However, let's if we look at that, we're looking for ideally somewhere between $30 and $50 on our iron condors this morning, which you should have been able to get at least 30. Depending upon the expiration that you're looking at. But it came back up. So what really matters is we hop in right before it. Where did it end up? And the difference right here. We're looking at 1.23. If you chose the 10 o'clock expiration, the 9 o'clock, 10 a.m. expiration, would have been at 1.194. So down about 25 pips. So you probably made about $10 on it. If you chose the 11 a.m. Eastern, 10 Central there, expiration 1.210 from 1.229. Then that was just 9 pips. So you made about $20-$30 on that trade. So it worked out very, very well. If you were doing the iron condor on it. Usually, like I said, it doesn't usually move enough, and really that would have been a pretty tough. You would not have got a 1-to-1 unless you just got it just at the right time. You may have had, or maybe if you got in earlier, if you got in really early and got a really higher strike, whenever I think the best strike you got about 1.24. So about the best strike you could have pulled off. And but you should have at least broke even on that trade, if not actually made some money. So that's good. That's what we're looking for, is to, ideally, of course, make money, but at a minimum, break even if we can. And that's why I like the spreads. The spreads are a lot easier to break even on the news trades than the other markets are. All right. So it looks like my screen is sharing on over now. That's good. And you can do them for straddles. You can use them for iron condors. I like those better than I like strangles. When I have the choice. I also like them better than butterflies when I have the choice. And the iron condors are it's one of those things, like, people get really into the butterflies, and I like them, but there's a big difference in P&L. Really, the loss is the biggest issue on the butterflies. If they work, you will make more, but if they don't, you definitely will lose, or you may make more. Put it that way. If they lose, you'll definitely lose more. And so what I was wanting to do today maybe is actually go through sort of the difference between the two, and maybe do a couple comparisons on butterflies versus iron condors. We've done a lot of stuff on straddles and strangles in the past, but I haven't really put iron condors and butterflies side by side. So I thought that would be just sort of a good topic for the day to throw up on the charts and look at it and go through it step by step. So let's get it going. I'm going to go ahead and pull up a chart. And I'm just going to get a real basic chart up over here. We're just going to pull up the dollar CAD. And not really going to have a lot on this chart, okay? And I'll just make it a 5-minute chart. And like I said, I really don't want a lot of information on here. I want to keep it really, really basic. And the only thing I'm going to add on is just a little toolbar that helps me do drawings and things of that sort. And the reason is because, like I said, I don't want to focus on anything but the simplicity of how you should compare condors to spreads. And to help with that, we're also going to pull up the diagnostic box spread and binary analyzer as well. So I'm going to get that over here. And let's see here. Just give me 1 second on that, as I was having to redo all that stuff to get the screen share going. But there we go. Okay, so got that up and loaded, and now what we want to do is I'm going to pull up. Just going to look at a couple spreads and binaries, like 3 o'clock. We're going to compare them side by side. It's not going to be the best time to do it, just because there's not going to be a lot of volatility expected. But either way, we can do that. We can also look at we can look at some more more volatile stuff as well. We may look at some binary, like maybe some indice binaries versus spreads, and maybe we can get a couple good examples out of everything that we're going to go over today, and make sure that you really get this, because I've discovered a couple things on the spreads and the iron condors that have made a pretty big difference to be able to do these contracts correctly. And so we'll do. We get 2 of these windows open on up here. I'm going to put one of them on the binary scanner, and I'm going to put one of them on the spread scanner. There we go. And then what we're going to do is we're going to choose just for this specific illustration. We'll see how well it works. Like I said, there's not a lot of volatility, so it may not be the best example, but it still will actually teach you something on the comparison. Because sometimes this is why you would choose a butterfly over a spread, depending upon how it turns out. And all right, I want to be able to open up tickets so we can just keep them all up there as we're going through it. Get rid of the S&P. Okay, so first thing is we're going to scroll down here, and we're going to find ourselves. There's a couple ways to do this. And I'm trying to think, probably the simplest way I like to do this, a little bit inverted, but what we're going to do is we're going to make our max profit be part of the goal here. So I'll show you this. This is actually the simplest filter for finding iron condors. And I don't know if I've ever taught this on the show. So stay tuned, and we'll be right back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. And so we're looking at, like I said, quite a few things on the market over here, see where things at, but we're going to go into the spreads versus the binaries on these trades. And we're wanting to put together the different pieces to go, what is better, a butterfly on binaries or an iron condor on spreads? So there's one that's actually, more desirable that we should trade. And like I said, I just want to make sure we put all those pieces together for you step by step, so that way you have them and you're able to effectively trade them. And let's see here, pull up one more thing just to make sure we got this. And going into the close on gold, so I gotta look at gold for just a second. But we got, what, about 5 more minutes here? Let's see. Okay, so if you don't have the scanner, definitely get access to that. Check that out, and I'd be happy to help you with that. If you have any questions on it, feel free to call in on the show. But we want to make sure that you do fully understand how to use this, because it's really going to help you a lot. And all right, there we go. That's what I was trying to pull up, that piece. Sorry, a little bit disorganized when I That sort of threw me off this morning. Okay. All right, so looking on over here and checking out the dollar CAD on the spread side of things, then what we're going to want to do is check out some of these trades. The first piece on the trades we're going to look at profit potential. And this is sort of an easier way, okay, for you to be able to quickly find what the best spread is for an iron condor, and it's a little bit weird. It'll throw you off a little bit, but if you'll stay with me, it's not real big. It's just basically we're gonna look for almost the opposite. We're gonna look for a straddle, and that'll help us easily find the iron condor, because really an iron condor is just the opposite, okay, of a straddle on Nadex. And I mean, it's not your traditional option definition, but as far as Nadex goes, pretty much just the opposite right there, okay. And the way to do that, the easiest way is to go in and put a risk reward of 1-to-1. And with that risk reward of 1-to-1, then we can go in over here, and now it'll drop off a whole lot of stuff. So we got that 1-to-1. Now we also are going to go in, and we're going to do our max risk, and we're going to put our max risk at $100. That'll drop off those massive spreads over there, okay? And then we're going to focus, in this case, we could look at 2 o'clocks or 3 o'clocks. And so first I'm just going to look at the 2 o'clock ones that I see. And again, I'm actually going to be thinking in reverse, okay? And make it even better, like right now, say I have a $46 by $52. That can work as an iron condor. Usually it doesn't, but it can work as an iron condor. But normally, like I said, not. So I'm going to click here on the 2 o'clock and here on the 2 o'clock. And see this right here? How this is laid out? If we did the opposite, it would be an iron condor. So I can go in real quick, and I'm going to reset my filters. I still have those two selected, but now I'm going to find the cell of the 1200 by 1300. So there's the cell of the 1200 by 1300. I'm going to find the buy on the 11 by 12. So there's the buy on 11 by 12 for 2 o'clock. Let's see here. You can find that one there. And basically it'll give us the exact opposite trade. I'm just trying to figure out why it's not on the list. So it's not even listing out. Oh, because it's not quoting. But anyway, but that would be the iron condor, okay? It's the opposite side. But the 2 o'clock's really just, there's not enough there, so we're just going to go ahead and bump on down to 3. Usually you need more time. The more time, the better for an iron condor, because you're really working on having some premium work in your favor. So we're going to get rid of the ones that expire at 2. We're just going to focus on the ones that expire at 3. Again, with that 1-to-1 risk-reward ratio. And that $100 max risk. When we come back, we'll be able to literally make a couple clicks, and we'll know if we have a good iron condor or not. Stay right there. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And like I said, we're going through the iron condors. The easiest and fastest way to find the iron condors is to go in and simply find a straddle. So right here on the straddle, we'll go, okay, well, you know what? We didn't like the 2 o'clocks. We'll check out the 3 o'clocks. There's a $10 one right there. Okay, let's find the one that matches up. See, this is 1.200. So I'm going to go down and see if I can find a sell with the same. There we go, 1.200. I can bring in on that trade. We'll go ahead and open it up, but we're counting out the fees there, so it's a couple bucks more. Basically, it looks like about $18, $19, about $20 on the trade. Okay, not inclusive of fees, include fees, and it's about $18. And what I'm going to do to compare this, I'm going to open it up, and I'm going to invert it. Okay, so right there, and then now I got to click on the other side. Okay, because if I'm buying, I go 97, not really much to make on that one. 11207, so now it's a lot less. So you know, this piece right here, so that you can put together, and $10 on the trade, probably not that good, but we'll compare it, and then we'll also go to like maybe a bigger, wider thing like oil, or we'll also look at some of the indices. I got a call right now, Kenneth from Las Vegas. How you doing?
Hello.
Hey, how you doing?
Good. I'm sorry. I just had a quick question about the radio show this morning with Tom O'Brien. I thought I heard that he got a contract price on that S&P trade of about $13, but I got filled at $167.70, and it came out to be on my end $23 per contract. I was just double checking to make sure I didn't do something wrong.
It probably just depends upon when you got in versus when he got in, because the market moved. That would be my guess. I mean, it wouldn't be necessarily anything wrong. Also, live and demo can vary a little bit. So, were you demoing? Were you doing live?
Yeah, I was doing live. I believe.
Okay. Yeah, he was doing live. I'm sure.
He got in at 1368.
Let's see here. I'll tell you what I got in at on that one. I also had some binaries in there hedging that thing up. But let's see. 13. Where is that order at? Okay, US 500, and we got an order to go in and sell them. Okay, what price did you get filled at?
I got 1360. Let me just double check that. I thought I had it right there.
13.
It was 13.
You mean 18? You mean 18?
I'm sorry. Yes, 18. Sorry about that. 1867.70.
Yeah, I got 1868.2 on it.
Okay, so
it's just the market. It's just the market fluctuating.
That was about 18. You got about $18 a contract then, correct?
Yeah. So it just depends upon when you got in. Like he's looking at it. He clicked the button, talks about it. There can be a delay there. I mean, you may get better, you may get worse. But yeah, like right there, there's my order, 1868.2.
Okay. The only thing I'm sorry to throw you off. I know you're talking about the condors on the news trade the other day. The first trade you put in, I got all the other ones in. It was the dollar yen. That moved so much more, and I actually lost on that one. But did everybody just take a hit on that one? Because the market just moved completely opposite of the other ones. It just kept going up and up and up.
Yeah, I have to pull it up. Let's see here.
That was the FOMC announcement?
Yeah, let me get a chart on it. We'll pull it up. We'll come on back. So no problem. I got plenty of radio shows. We can always come back to this piece. But let me get it on here. Pull up the dollar yen.
Kind of on the same subject because you were talking about the condors. So
yeah. And we'll go over here. And let's see. We got to be looking at that was on the 19th at 2 o'clock.
Correct. Yes.
So yeah, right. I think that's the bar. So okay, there we go. So yeah, 19, 2 o'clock. Yeah. So that one. Let's see. We got in, and I mean it. As you know, it went straight up. It never even pulled back one time. So on that one, yeah, that was like 98 pips up. So that one would have lost about $50. The other two did really well, especially if you took profit off when it popped up, and then when it came back down, took off again.
Okay.
And on the euro yen and the pound yen, and the pound dollar, of course, it flew like 130 pips. So I don't know how many, like what all combination. I don't know if you did all four, if you did pound yen, euro yen, U.S. yen, and pound dollar. So notice also, like I don't know if you noticed on the show, but I did less U.S. yens than I did like pound yens and euro yens and pound dollars.
Okay, no, I didn't catch that. I kind of broke even for the day, but I didn't catch that because we're going quick. But
it's really fast on FOMC day. Here's the reason why. FOMC is a dollar announcement, right?
Okay, yeah.
So I expect that the U.S. yen actually usually doesn't move that much on it, but I know it's a dollar announcement, so if there is going to be a big move, it really is going to move, like regardless. So I had a little more caution on that. Putting like 5 contracts on dollar yen, but I did like 10 on euro yen. I did 10 on pound yen because those aren't dollar-based pairs. Yeah, they're going to be affected, but normally you don't get just 100 pip move on pound yen, euro yen. You usually get about 30 or 40 pips, maybe 50 pips. But even if you get 50, like it usually pulls back down about 20 or 30. So you can take off your profit on one side, and then when it comes back down, get out. The pound dollar, obviously, I expected the most movement on, but both of those being dollar yen and pound dollar, pound dollar expected the big move on. Dollar yen, I was like, and really in a hindsight's always 50-50. In hindsight, probably should have avoided the dollar yen and stuck with the just the euro yen and pound yen. So that way, I was leaving the dollar. Like if I was going to do the dollar yen, I should either straddled it or left it alone. But I went less on it, and I should have told myself, hey, if you're going less, just don't go at all. Put the money on the other trades. But so yeah, that one you definitely probably took pretty much about a full hit unless you got out, which should have been about $50, $50 to $60 on that trade. On the straddles, I mean, that was like $70 or $80 in profit. And then on the two butterflies, about $30 a piece.
Okay.
So, and again, that was the big piece on that to go to these butterflies, because this is really important. People, or not the butterflies, but the condors. I'll pull up the euro dollar on that one, because I think this is a piece that people can really miss. Let's see, let's get back over there. All right, I think we're here. Right. Yeah, right there. It's like, okay, so we got the announcement just about to come out. It shoots up, okay, like right here.
Okay.
Really fast, like 30 pips. And that put our lower one that we bought down here, we were like $3 or $4 away from max profit on that one. Because we bought it like at this level right here, okay? So when it flew up, there was just like a few dollars in premium left. Pretty much not even there was only pretty much a bid. There wasn't even an ask, okay? So you bail on that. Get out, because there's no, what if it comes back down? Why not just go ahead and take the max profit? Well, then what happened next, I bail on that, and then it comes back down, all right? And, I'm watching this thing, everything's moving around, and what you could have done, what I like to do is, this sounds weird, but it's like, okay, let's say you can make $50 on the trade, right? Let's say we bring $25 in on each side, which is about what I think it was like 54 on the pound yen, and I think it was like 46 on the euro yen, okay, with like the max profit, if it expired right in the middle, okay? Now, obviously, we don't really expect, it does happen. I've had a few of them this week, but it does happen where it expires, but we don't expect the market to expire like right there in the middle of the two spreads. But we also don't expect it to expire like above the ceiling or below the floor. So I don't really expect to make max profit, but I also don't expect to have max loss. Does that make sense?
Exactly, yeah.
So what I really expect is probably to either make or lose about half of whatever my max profit and loss is. So let's say my max profit's about, let's just make it easy. Say it's $50 and my max loss is $50. I probably expect to make about $25 or lose about $25 on the trade. Okay? So in my mind, I still have a 1-to-1. Understand that sometimes I'll make that max profit, and sometimes I'll have that max loss. But those will even each other out. But most of the time, if I can pull off, and really if you can get where you can pull off like that $25 or $30, works out really well. It's when it shoots up, you take that profit, comes back down, you're able to get out of this thing at, pretty much break even. Maybe, you made like, say, $20 here, about $25, $30 here. Because one of the sites was really weighted heavily. And it comes back down, you get out of this trade for maybe a $5 loss. And you're done. But remember, you made like 20, 25, $30 on the other side. Trade's done, profitable, out. And then it flies back up. You're like, wow, I'm glad I got out. It comes back down. It starts heading back down here. If it came down here, you still would have been about break even on the trade. So if you just held the thing to expiration on euro yen and pound yen, you basically broke even, or probably made either made or lost a few bucks depending upon your exact fill. But if you would have taken profit and then when it came back down, got out, you definitely have a profit. And this is what I expect on euro yen, pound yen. Is I expect it to fly up, fly down, fly up, fly down, fly up, fly down. Now, a lot of times, it happened a little bit later. A lot of times what will happen is it'll come back down like this. It took about 15 more minutes on this day. But and I think part of that was due to the press conference. On the days where you don't have the press conference, usually we don't have this delayed drop. Because what happens is it flies up, it flew down, it flew back up, and then it waited. This was the press conference right here. Okay. As the press conference came out, then it slowly but surely came down a little bit, came up, and then, finished its descent right back to where it was before it started. Because we got right back to right at the middle of the spread. Okay? Like that perfect price, which is what you really want. The price to come back to after it explodes. Because if you take profit off here and it comes back down. So it came all the way back down here, but since you have the press conference, it sort of delays that out. Right? Because everything explodes, and then it chills out. And then it slowly moves based on what's being said. You get a little spike. Oh, we may end up cutting interest rates sooner rather than later. Poof, and then. But we also got to be mindful of this, and this. Okay, but there's also this. So that's what all this is going on. When you don't have the press conferences, which is basically every other FOMC, it usually will fly up and then fly back by 3 o'clock. And I don't know what kind of charting platform you use. I use NinjaTrader.
Yeah.
And you can go in and you can pull all the. It's pretty cool. You can look at least the last year of data, and so you can actually. It's really helpful to go back and look at each of the dates to see how did that instrument react. And you'll see you'll be amazed about how many, like 9 out of 12 times, like over and over again on almost every instrument, you'll see a very, very, very similar pattern. And so I'll look at, how did it react, and I'll also see is there anything different, such as was there a press conference or not a press conference on that day. And the big move days are the days that have the press conferences. You don't really see big FOMC move days on the days they don't have the press conferences. It's really rare. It's not that it can't happen, but it's really rare. So that's why I went ahead and did the straddle on pound dollar instead of went to the string, because I'm like, you know what? She can come out and say something, this thing's going to explode. But I don't know. That's just a few small tips. But I hope that helps a little bit.
Absolutely. Thanks a lot. I appreciate it, Darrell.
Hey, you bet. No problem.
Okay. Bye-bye.
Hey, you too. Thanks for calling in. Cool. All right, we're going to hop back over, and we'll do what we can on this. But no worries. We can always cover it next week, too. So I'd rather have a caller any day of the week, because that means you're engaged and you're asking questions and you're getting it down. So looking at this, it's Iron Condor, and I'll go, like I said, into a lot more detail on it next week, but obviously not worth doing. There's only like $10. But let's look at the binary. Let's look at a comparable binary on it right now. And yeah, now I think it's even less now. Now it's like $9. So how do I figure out what the comparable binary is? Really, the way I figure it out is I look at the strikes, or the prices that I'm actually purchasing at. So like 207 by 1198. So I'm going to go over here to dollar CAD. I'm going to find the 3 o'clocks. See, let's get rid of the S&P there. 3 o'clocks, and we're going to go down here. There's a lot of them because we got dailies, we got weeklies, we got intradays. It was one of the beautiful things about the scanner versus the Nadex platform. If you go over here, you got to go in, you choose, dollar CAD. You got to click on the intradays. Look at all those, the dailies. Look at all those, the weeklies. Look at all those. And none of the math is done for you. So unless you manually open up each individual ticket. Whereas right here, I can see intradays, dailies, and weeklies. I can see the prices, and I can see the risk and reward of every contract. And it sorts it by strike. So, but again, looking back at that, comparison, if we're looking at, 1198 by 11-10, then we got 11-11, okay, and then we got, so make sure you get that right, 1198, so 98, and 9200, pretty much right here, okay. So this would be a butterfly, okay? It's actually a pretty sweet butterfly. On this one, there's no implied volatility built in the market. It's a very small butterfly, okay? I mean, you're talking 11 it ticks, but that's a butterfly that would bring in 34 plus 32. That's a $66 butterfly, meaning a $34 risk. If it stays in that range, you make 64. You basically have a 2-to-1 risk-reward ratio. Versus, at best, you're going to make $10. You're not going to lose that much on this, but you're going to make that much. So, that's pretty nice. We'll talk about it a little bit more when we get back. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right here. Okay, so just looking at this trade. It looks really good. You can make a lot of money on the trade, okay? If you went in and you did that trade, it would have brought in like $60. Here's the problem on the trade. Lose $35 very, very easily. But, again, your return's really good. If it stays inside that little 10 or 11 tick range, you're golden, okay? It's a very small range. So if I pull up a chart over here, but, I mean, you'll make a nice profit. And has it been staying inside of about a 10-tick range or so? Yeah. We've been getting about a 10-tick range. Over here we got 16. We have like 8 is the expected range, by the way, for the next hour from high to low. Okay? But, by the way, we're at right now about, let's see, actually, no, 15 is the expected range for this hour. High to low, we're at 8 on that expected range. So, understanding those expectations, what's there, what I can do to take advantage of them, it can pay off really, really well. But just to say, we have about 8 more ticks left of movement, so it's a good chance it's going to break out of that range. The last hour we had an expectation of 20, we got 16. So this one, it wouldn't take much for us to end up below that 1.2. We're basically sitting at it right now. Now you could scale in. You could okay, I like this one. It's going down a little bit. I'm going to drop it. One. Now I'm bringing in about $40. Widen it out some. So that's also a possibility of something that you could do on the trade. But I want you to see the different pieces and how you can put them together. Great payout if it stays in the range. In this case, you'd lose about $55. Make about $45 if it wins. You lose about $55 if it loses. On this one, we're only talking about making like $10 on the trade. There's really not that much to be made on the trade at all. But let's say if it moves 20 pips, what we do? We lose $10. So we can make 10, we can lose 10. And, if you want to make 50, just do a lot more contracts. There's the advantage on, I guess the easiest way to say it is the advantage on the spreads, on the iron condors, is you won't make that full profit like you will on a butterfly if it stays in between the strikes, unless it's like right in the center. But you also won't lose that full loss if it goes outside of that price. It'll be like, unless it goes way outside, okay? You're only losing like $1, above. So if you make like $10 below and $10 above, then it has to move up 21 ticks before you start losing anything. And it's only $1 a tick. Whereas if you had like 20 ticks wide on the binaries and it moved up 21 ticks, as of expiration, you'd lose the max loss, not just $1. Now, what if on the spreads, if it goes up 15 ticks, on that 20 tick move, you're only going to make $5 on the trade versus make maybe 40 or 30 or 40 or whatever on the butterfly. So I guess you could say you're more likely to make max profit or lose. And you will either make max profit or you will suffer max loss on the butterflies as far as expiration goes. On the iron condors, you will most likely not suffer max loss and most likely not make max profit. You'll be somewhere like right in between there. So it's a little bit more risk controllable and a lot less need for a stop loss, and it can be a lot further away even if you do want to use one. But we'll dive into these more next week. We're going to look at some with some longer expirations. We only had minutes left on these, so there's not a lot right there. But we can dive in and just to show you just a quick example. I know the show's about to wrap up here. But, I guess that's it. So we'll have to tackle it next week. All right, y'all have a great day, and I will see you on Monday.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.